Good morning, everyone. Welcome to the 24/7. My name is Niharika Walia, and I'm with you with the area of AFM. Good morning, sir. I think if you're looking forward to our courses, then you can check it out or on our website or in our app for further details. What I can do is I can show you where you can exactly go and find all the details for our classes. What you need to do is, in order to take up any of our classes, you have to go to our website, that is www.adda247.com. There, if you go onto the website, you will find the details of the same. What you need to do is go on to the area of JIB and CIB. If you're looking forward towards the new courses, then the JIB 4.0, 3.0 batch is here. So you can join the 3.0 batch. This is only for the syllabus. There it covers 200 hours of live classes along with the test series, right? So if you're preparing for that, then you can take up this particular batch as the test series are also there. So the timings for all the classes are already stated. Then if you're preparing for this examination, what you need to do is you need to click on the area of buy now and use the code Y541. Then it will give you a discount of 81% currently. This particular offer is only for a limited period. So if you're preparing for it, then you will get it at 81% discount. This is the charges for all the English medium section there, right? So if you're preparing for it, then it will cost you 3999.80. If you are purchasing it through our website, or if you're going through app, you can get another discount of 81% altogether. That means at a sort of 80, there you have 81% of discount, right? If at the same time, if you're looking forward towards JIB and you are targeting it in a bit better way, then what you can do is you can take up the JIB and CIB Kama pack. This includes both JIB as well as CIB. Along with that, this is not only the syllabus class, but it will also include every other class that we'll be coming up with: par pack batch, numerical batch, revision batch, e-books, whatever we introduce, the case study batches, whatever we come up with. But this will not only include the JIB, but will also include the CIB as well. Currently, if you buy it for 6 months, then you'll get it for 12 months altogether. If you get for 12 months, then you get it for 24 months. The validity of this Mahapack is for 12 months. That means this particular pack is available for you for a period of 24 months. That means for 2 years. So if you buy it today, you don't have to worry about buying for the CIB or any other thing that you need for JIB altogether. Both the mediums would be open for you, that is English medium as well as the bilingual batches. What you can do is you can use the code Y541 and apply it. There you get double validity as well as 81% discount, and the charges are 10,799.20. So if you're preparing for this examination, then kindly go ahead and check it out in our app or our website for further details. If you could do it through the app, you'll get discount of another 1%. So try that, right? So we'll be meeting. Now let's talk about the topic that we were discussing, that is our the area of company accounts, right? So let's move on. Okay, so let's talk about that. Company accounts. Here comes the first question, everyone. The question says, when we talk about the forfeited shares when reissued issued are reissued, the amount of discount allowed on these shares cannot exceed. Basically, we cannot issue the shares at discount at all. That's the basic rule, that the shares are not allowed to be issued at discount. Debentures can be issued on the same, and every other thing can also be, but this is not allowed. Excuse me. But what happens here is, in terms of a share which is reissued, the share which was taken over from other people to whom we issued shares earlier, but they failed to pay us the money later on, and then we decided to keep the particular if we keep that particular thing with us only, that means we reissue the share to someone else, then the amount which we have received already will become forfeited. See, if the share was of rupees 10, out of this the particular person failed to pay rupees 3, while he paid rupees 7. He paid rupees 7, right? If 7 rupees we have already received, what will happen? If 7 rupees are already received, then this amount is something that we will not give them back. Simple reason that this person didn't pay the remaining amount at all. So his share is now forfeited, or we keep this amount with us. After forfeiture, we can reissue the share of rupees 10 to Mr. B. Now the shareholder is changing. Either we charge the entire 10 rupees, or we can give discount as 7 rupees is already received. So the maximum discount that can be given is rupees 7, the amount which we have already received from the previous shareholder. Now, the next point, the part of authorized capital which can be called up only on the company being wound up is called issued capital, unsubscribed capital, reserve capital, or none of the above. If we talk about the part of authorized capital which can be called, see, in terms of capital, not the entire capital can be asked for. Only a part of it would be called up. There is a part of the organization's capital which we'll keep if the organization is dying. Only then we'll be calling that much amount. That is what we call as reserve capital. The capital which is kept, that would be asked for only when the organization is about to liquidate. That is called reserve capital. Next point, large advertisement expenditure to introduce a new product is capital expenditure, revenue expenditure, deferred revenue, or none of these. Large advertisement expenditures are done. See, the organization will incur a large amount of expenses to introduce a new product. Then when you have incurring such a big expenditure in order to start the new product, or you want that particular product to be very popular among the people, then this is deferred revenue expenditure, the expenditure that is being done in a huge amount today so that we can earn a lot tomorrow. So what will we do is, at this point of time, we will capitalize it for the moment and we will write it off over the period of time. That's why it is called deferred revenue expenditure. The revenue expenditure which is done today, but its benefit can be postponed or it can be spread over a period of a few years. Then outstanding salaries is shown as, what do you mean by outstanding salary? It is shown, outstanding salary means a salary which is not paid yet by the company. Then it is an asset in the balance sheet or a liability in the balance sheet, adjusted in the P&L, or both B and C. When we talk about outstanding salaries means the salary which is not paid yet. So it's a liability for the company and it's also adjusted in the profit and loss account. So correct answer is B and C. Basically, it's a liability, but also it is increasing our expenses. Right? So that would be shown. The answer is both B and C. Next is in the ASR, rule-based accounting standards, principle-based accounting standards, partially rule-based and partially principle-based, and none of the above. If we talk about the Indian accounting standards, they are basically principle-based accounting standards. Ind AS has recently been introduced in your syllabus. Earlier, they weren't in the syllabus, but they are introduced now. Next question. The cost of material includes change in raw material, opening stock, less closing stock, changes in raw material based upon opening stock and purchases, less closing stock of raw material, or none of the above. If we talk about the cost of material, the cost of material will include all of these. That is, it will include opening stock, whatever stock we are currently having already. Then we purchase more stock during the year. Then we will reduce it by the closing stock that we have. So basically, the cost of material includes opening stock, the opening inventory, then we bought more inventory, and then we have the closing stock. So opening stock plus purchase minus closing stock is defined as cost of material. Changes in the raw material based upon opening stock plus purchase minus the closing stock. Okay, here comes the next question. Security premium on issue of shares can be a maximum of 5%, 10%, 15%, 25%, or none of the above. Security premium is something which can be a maximum of no limit. There's no limit how much money that can be charged from a share. If it is more than rupees a specific amount, then it is absolutely fine. If the face value of the share is rupees 10, you can sell it at 100 rupees. You can sell it at 20. Whatever amount you choose is the security premium. It is the amount over and above the face value that we charge from the shareholders. But there is no restriction on the share security premium. Basically, the restriction is only that the shares cannot be issued at a discount. That means only shares are prohibited from the issue of discount. Nothing else. There is no restriction on security premium at all. Here comes the next question. It says security premium reserve can be utilized for. At what point of time we can use the particular security premium, everyone? The security premium can be utilized for bonus issue of the shares, writing of preliminary expenses, buyback, or all of the above. Security premium can be used for 5 basic purposes. That means writing of the preliminary shares is one of them. Then it can be used for issuing bonus as well, and at the same time it's also used for buyback. For all these 3 purposes it's used, and it's also used to write off discounts as well. That is also there. So in this case, the correct answer would be all of the above. Right? Next question. If nothing is specified, then the security premium will be included in share application, share allotment, share first call, or share final call. If nothing is specified, we will take the security premium in the area of share application, allotment, first call, and final call. If nothing is specified, then it will be a part of share allotment. That is the second installment. In terms of shares, we have first installment called share application, second is share allotment, third is share first call, and last is share final call. Right? That is what we specify here. The correct answer is share allotment. Okay, here comes the next question, everyone. It says, if we talk about the nature of share application account is, it's a real account or a personal account or a nominal account or none of the above. What's the nature of share application account, everyone? The nature of share application account, share allotment account, as well as share first and final call. All of these accounts are basically personal accounts because these accounts or these payments are to be made to persons. That's why it's called a personal account. It's called a personal account. Next question. Authorized share capital is maximum capital as per MOA, maximum capital as per AOA, or both A and B. Sorry, minimum capital है ना? ठीक है. I'm sorry. It is minimum capital as per MOA, maximum capital as per MOA, both A and B. If we talk about the authorized capital, it is the maximum capital which is allowed by the organization to be raised. This authority or this permission is given by ROC. That is, this permission is given by Registrar of Companies. It will allow a particular company to raise capital. there are different kinds of capital. First is authorized, the maximum capital that the organization can raise. Then the organization decides to give people shares. Now that is what we call as issued capital. Then whatever we then out of the amount that we issue to the public, then people subscribe it. The amount that they subscribe or they take up is called subscribed capital. So it is amount issued, then subscribed, and then the amount which for which the people pay is called paid up. So basically, this is the maximum permission out of which we give to the people is issued. If they take it up, it becomes subscribed, and once they take it up, once they make the payment, it's called paid up. So you can see that there are overall 4 types of capitals. So in this case, the correct answer is maximum capital as per MOA, that is Memorandum of Association. It's basically an internal document. You can say this is a document basically which specifies all the details regarding the working of the organization with the other people or the external environment altogether. So in this case, the correct answer is maximum capital. You cannot go beyond this capital. Nobody is allowed to raise capital more than this amount. So if you're preparing for the JIB and CIB, so kindly use the code Y541 and take up our courses at 81% of discount, as this is for a limited period of time. So kindly hurry up and check it out on our website or in our app for further details. Right? So this is where I end my session. I'll come up with more questions in the next class. We are covering up the topic of company accounts. Right? If you have any queries regarding the particular courses, then you can check it out in our website or on our website or in our app for further details. And kindly download the app to get a discount of 81%, as on the website you'll get it 80 and in our app you'll get it 81%. So use this particular point to get the resources at the maximum discounts and maximum benefits. Right? So we'll be meeting tomorrow at the same time, that is 7:30 a.m. If you're looking forward to it, then the batches have just started. So if you're looking forward, then hurry up and join it now, because the live batches are available. At this point of time, you'll be joining from the first or in the beginning of the classes only. Later on, you'll be missing out some classes. So why to do that? What you can do is you can join at the right time so that you attend the live classes altogether. Right? Okay, everyone. Thank you so much. We'll be meeting tomorrow.